Hello and welcome to the quarterly performance segment of Making Sense of Markets, Q3 2017. My name is Sheldon McFarland and I serve as the Vice President of Portfolio Strategy and Research at Loring Ward, and I'll be your host for this segment. Let's open our discussion with a look at historical maximum annual drawdowns for the S&P 500 since 1980. An analysis shown on screen yields the following results. The smallest maximum annual drawdown for the year was a negative 0.36%. The largest maximum annual drawdown was a negative 37.66%. The average maximum annual drawdown, as shown by the red line there on screen, is negative 9.40%. And as you can see, year to date with a negative 2.58%, maximum annual drawdown, we're well below average. Yes, recent volatility is low, and if it were to spike some, it shouldn't be too worrisome for investors as we are currently just below normal levels. Further, a retreat back from equity markets in 2017 for fear of a snapback in volatility would likely have cost investors some measure of participation in the rising equity markets. For example, since November 22, 2016, the S&P 500 has closed above 2,200 for the first time, and since then has set 43 new highs. Finally, as a reminder, diversification can dampen the impact that any one portion of the portfolio can have on the overall portfolio volatility. So even if volatility were to pick up, say in the US, a globally diversified portfolio should mitigate some of the negative impact resulting from this occurrence. It's important to stay the course, maintaining a globally diversified mix of assets aligned with your given risk tolerance. Looking at a macro view of performance around the globe, returns often differ in stock markets around the world, and this quarter is no exception. A snapshot of performance for the first quarter shows that returns were positive in North America, but even higher in other regions around the world, partially due to a declining dollar, which fell negative 2.7% during the quarter. While all major regions produced a positive return for the quarter, North America recorded the smallest gain. Latin America was the strongest performing region for the quarter, gaining 15.1%. Followed by Europe, Middle East, and Africa returning 6.2%, Asia gaining 5.5%, and finally North America returning 4.5%. In general, during the quarter we saw positive results for most asset classes, with small growth companies leading the way in both US and international markets. Looking back over the last 15 years, we see similar trend, both US and international stock markets rewarding investors who stayed invested specifically in the small and value segments. In the US, a tilt towards small company stocks versus large company stocks has rewarded investors with a 15-year annual premium of 1.1% on average. However, investors tilted toward value versus growth stocks have experienced relative annual underperformance of 0.6% on average. Internationally, investors tilted towards small and value stocks captured average annual premiums of 3.8% and 0.4% respectively. In general, investors who stayed invested and followed our strategy of tilting their portfolio towards small cap and value companies, both in the US and international allocations of their portfolios, were rewarded with higher returns than a non-tilted portfolio over this period. Looking at the most recent quarter's asset class returns, we see asset classes in your portfolio ranging from 7.3% for international small cap on the high end to positive 0.3% for cash on the low end. Maintaining a diversified asset mix, such as the 65% stock, 35% bond mix shown in white, kept you away from the more extreme returns from year to year with significantly less volatility over the last 15 years, highlighting the importance of maintaining a well-diversified mix of asset classes in your portfolio. Here we see the absolute impact of different asset classes on a sample index mix of 65% stocks and 35% cash and bonds. We see that the largest impacts to performance were driven by international large value stocks, US large cap stocks, international small cap stocks, and US small cap stocks. The overall gain on this index mix for the third quarter was 3.4%. To review this or past commentary, please see the Making Sense of Markets portion of Loring Ward's YouTube channel. This concludes our presentation for today. Thank you for joining me. Until next quarter, goodbye.